that I see brewing in the U.S. economy. Will the Fed go higher? Will the Fed pause? Let's talk about some earnings and an interesting opinion from Morgan Stanley's Mike Wilson. I know we're getting started a little bit early today, but I'm excited. I've got some stuff to do after this, so I wanted to make sure I brought you this as close to 7:30 as possible. So let's get started. Kevin O'Leary from Shark Tank, Mr. Wonderful, I believe is his nickname. He is talking about something that we have brought up on this channel a couple of times. And I think this is where the real crisis is. And, as always, where there is crisis, there is opportunity. Talks about small businesses, specifically small businesses having access to capital, liquidity, lending. This is something I first brought up probably, 4 months ago in a conversation with Lance Lambert from Fortune. We talked about small home builders, right? The big home builders, the KB, the Lennars, those folks, they have access to capital. They can sell shares. They can do lots of things to keep the machine going. But what we have seen with community machines, this is interesting for folks. Small businesses make up roughly 60% of the economy. So again, when small businesses struggle, when they can't expand, when they have to contract because their cash flow statement is not healthy, it could be felt. And again, I don't think we have yet felt the liquidity crunch from these small businesses. So this is something to watch for. I think it's going to be very unfair. The big boys will get bigger, the medium ones will struggle, and the small ones, frankly, might go out of business. It's where we are in the cycle. Let's talk about something that Morgan Stanley's Mike Wilson put out. Mike Wilson put out that basically, hey, with inflation falling, yes, inflation falling, we should see a sharp earnings recession. That is an interesting thing, right? Pricing power from these big conglomerates are not as strong. Good thing. You and I see lower prices at the store. But that is also going to amplify the earnings recession, which again we have been in for, I believe, this might be, I think that's actually the third quarter where earnings are down. I think they're down about 6% across the board. Mike Wilson, again from Morgan Stanley, says we are on the cusp of boom and bust cycle. One of the things that Mike put out that you and I can watch on Monday is, thank you for letting me, the Wi-Fi is going out. I'm outside of my house, so I am sorry that the Wi-Fi is going out. I will keep rolling. Hey, Rylas, how are you, man? Good morning. So back to Morgan Stanley. We're going to keep this rolling. If I have to record it later, I will. But Morgan Stanley's Mike Wilson says PPI is his favorite leading indicator. Frankly, I have heard no one over the years talk about PPI being the most forward-looking indicator, so I was interested. What he is basically saying is if you look at PPI, which has been falling, it is going to be an indication what might hit corporate earnings. That makes sense. Remember what PPI is. CPI is what you and I pay at the store. PPI is what the store pays the wholesaler. So if PPI is falling, that could be a sign that earnings could be coming down because the margin is there. So again, so that's something to watch out for. So we're going to be watching for PPI. PPI comes out on Friday. So very important note from Mr. Mike Wilson. CPI on Thursday. Let's talk about that because, again, it's going to go up. It's not going to go down. I think there's a very good chance that CPI on Thursday will be 3.3 and maybe 3.4. Why is that important? Well, in 13, that CPI headline has not been going down. I think the CPI headline will get the news. A lot of talking heads will talk about it. But you are looking at CPI core because we've been talking about shelter inflation. Shelter inflation is on the cusp. I believe it will be meaningfully better next month, but there is a chance that we see CPI better this month. Now, how do we know that? We're going to know that CPI core is better if shelter inflation is less than 50% of whatever the reported number is. For the last several months, shelter inflation has been somewhere between 60 and 75% of the core inflation. It's frankly why core inflation is sticky. Core inflation will start to be a heck of a lot less sticky next month. We might get a wisp of it this month. So again, on Thursday morning, we all should be looking for CPI core. Headline will be a sideshow. It'll be a distraction, base effect, all that stuff we talk about. Core is where the action is. The people that are really trying to see if inflation is rolling over will be focused on core. Saw an interesting article from Lance Lambert at Fortune this morning talking about sellers being on strike. Folks, I think what we are all learning is that 7% frankly locked, and we are at around 7%. And we are heading into the slow season. This is something that we should watch for. If rates stay at or around 7, we should see transactions fall even more. In fact, you heard me, I think yesterday or the day before, make a bold call that August existing home sales will be below 4 million. And I call that on like August 5th. And again, we won't see those numbers to September, but rates matter. 7% locks up the market. And again, remember, 7%, everybody talks about demand, affordability. And yes, that's important. But frankly, that should be old news. What is opening, if you pay attention, is it hurts supply. That's the housing is broken, the Fed broke housing. It's about the supply. The move-up buyer is frozen in place and will be frozen in place for years to come. That is what we need to be watching for. And 7, that doesn't do anything to get supply going. A couple of other things we should be talking about. We should talk about some earnings. Let's talk about Chegg. They had a huge miss last quarter or 2 quarters ago. They surprised upside. I think their stock exploded higher, maybe a short squeeze, don't know. UPS's earnings is something you and I have watched for a year now. Sharp drop in revenue and profit. Some of that is without question because of the threat of a looming strike, right? People switch to other carriers. But one of the things you have to realize that UPS said is online purchases are weaker. Something to watch. Don't know if you saw this, but China. Again, the China data is what it is. I don't know that anyone trusts it. Maybe it's directionally correct. But I got to tell you, when China reports an ugly number, you have to scratch your head and go, ooh, if they reported that number, what might the real number be? And of course, what I'm talking to is the plunge, crash, collapse, whatever you want to call it, in exports and imports. Exports crashed 14.5%. China is an export economy. It dropped 14.5%. Imports dropped 12.4%. The China economy is gasping for air. Their consumers are conserving cash. They were burned. They are not spending. This revenge spending that they were hoping for did not show up. And man, exports, let's just be honest. Would you have thought China's exports would be down 14.5%? That was not on my bingo card. Something we need to pay attention to. It happened yesterday, and I fear will happen a lot more in the coming weeks. U.S. banks downgraded. Now, this was done by Moody's. There will be others. If you took the time to read earnings for banks, and specifically I'm referring to today's smaller banks, maybe mid-sized banks, banks like, you may never have heard of, I get the names, like M&T Bank, Prosperity Bank, all medium size. They were downgraded by Moody's, and frankly, for good reason. Their earnings power is down. There is a lot of pain going on in banks, but here's what you have to watch. The big mid-sized banks, and then eventually do they go after the big six? I suspect the big six, right, the JP Morgan, Bank of America, Wells Fargo, on and on and on, are fine. Just like we opened this discussion about small businesses not getting lending, I think the bank landscape changes drastically over the next 6 to 12 months. We will see more and more failures. We will see more and more shotgun marriages. It is, I think for the next year, frankly, across the economy, it is going to be good to be big. No, not big. It is going to be good to be huge, and it's going to suck to be everything else. I think if you are huge and you have, capital reserves, you have stock you can sell, bond offerings, whatever it is, you'll be fine. But yes, expect more bank downgrades. This is just the beginning, and I think others will follow. Moody's, like S&P, and things of that nature. Elena Botros, another writer for Fortune, had a very good article talking about the office space. The office space, frankly, is so bad, we may get record, extend, and pretend. The office market has almost no, and according to Elena, zero liquidity. What does that mean? That means if you want to buy an office building, you have to pay cash. Nobody's writing new loans. The window is closed. That is horrible, but it is also an opportunity. If you happen to be an owner of an office building and you frankly know the lender can't foreclose, because who's going to buy it? You're going to sell it at 15 cents on the dollar? Probably not. So I expect there to be a lot of extend and pretend in the office segment. Let's get us to next year. Let's survive to 25. The lending market in office is so bad, it actually could be a good thing if you are an owner of office. Because again, you really don't have another buyer. And if there is a buyer, it has to be a cash buyer, and they are going to hold on to their capital in a big, big way. Let's talk about the Fed. Earlier yesterday, I think we talked about Michelle Bowman talking about multiple rate hikes with an S coming. Looks like Patrick Hawker and John Williams, both spoke in the last 24 hours, basically indicated that as of right now, it is their opinion the Fed is done. They did hold out hope that by the September, if data went the wrong way, they would vote differently. But as of right now, they are of the opinion that they will hold. The Fed is done. A couple of things. One, nobody is talking rate cuts. Rate cuts, don't think a rate cut's coming. Would Michelle Bowman say multiple rate hikes, and John and Patrick say no more? Frankly, this is what happens, and this is frankly what I have been waiting for. There was going to be a time, and maybe it's right now, where the Fed presidents disagree. This is how inflection points happen. When, 6 of the Fed presidents say go higher, 12 say pause, or vice versa, that is where we get debate. Most of this run, and I think all but one meeting, the Fed rate increases have been unanimous. As of right now, it would not shock me if September is not unanimous either way. That is what we have been waiting for. That is what happens at inflection points. So 2 more things. Donovan, congratulations for getting your card. And yes, folks, if you get a card, your golden ticket, or your next deal, and you're out of the country like Donovan's in Canada, it's okay. I'll mail you a card. I just got to put 4 stamps on it. So if you're in Canada or in Europe or Asia and you get a deal, I would love to send you a card. I'll figure out what it costs to mail you a postcard, and you will get this eventually. So don't think this is just the United States. This is around the world. If I help you, I want to send you a card. And then finally, most of you know I created a new channel called the Daily Financial News. It will take this live and add some updates and all of that. Thank you for all that have subscribed. Thank you for all that have watched it. I feel really good about that channel. 2 reasons. 1, I am never going to stop doing these lives. I love doing them. I think it's a highlight of my day, spending 15 or 20 minutes with you talking about The new channel, I believe, will attract new people to the One Rental at a Time family. And that's my job. I believe one rental at a time, do the work, take responsibility, needs to be heard by others. I think the new channel with one video a day will attract new members. Most people can't fathom a content creator that does 5 videos a day. They won't subscribe. It blows up their feed, and I understand that. But again, I'm having too much fun to stop. So this other channel, 1 video a day, only the daily financial news. I feel good about it. I personally, frankly, between you and I don't do anything. My team will download this video in about a half hour. They will add some updates that we've talked about, and then they will load it 6 o'clock in the evening. So thank you for subscribing. We need to get it to 1,000 subscribers, and we need to get 4,000 watch hours so we can get it monetized. But yes, I believe the new channel will attract a new tribe. I think it will allow us to grow. I think doing the work matters. I think my course, How to Get Started One Rental at a Time, is changing lives. I know this stuff works. We have thousands. So it's my job to grow the group. And I think the new channel is working. If you want to check it out, you want to help subscribe, you want to help us get to 1,000, I would appreciate it. We need to get to 4,000 watch hours. That's going to be hard, at least because I need more videos there. But I feel good about it. And one more time, Donovan, congratulations in Canada. Your card will go in the mail. I'll drop it off right now. All right, everybody, take care of yourself. Bye.